If you have 100,000 Kenyan shillings, should you buy Kenyan stocks or should you buy ETFs? An ETF is also called Exchange Traded Fund and is basically a fund which holds a group of assets under one fund. They could be stocks, bonds, commodities, you name it. And the beautiful thing is that at the Nairobi Securities Exchange, when you look at the market equities, among the 13 sectors there, one of it is ETFs. And we have 2 ETFs at the Nairobi Securities Exchange, is what I want us to look at in details today so that you can be able to appreciate whether you can prioritize Kenyan stocks or even ETFs. So today we are going to examine 2 ETFs in details. And the 2 ETFs are Absa NewGold ETF, all right, and Satrix MSCI World Feeder ETF, okay? And these 2 ETFs are quite different. That's why it's important to appreciate how each of them is constituted and even so how they've performed at the NSE over the recent period of time so that you have a sense whether they are good investments or not. So the New Gold ETF gives you exposure to physical gold. Physical gold is the backing or underlying asset, whereas the Satrix World Feeder gives you exposure to global developed market equities. So think about it. Instead of investing individually those global assets, like for example, Nvidia, Apple, you name it, the Satrix MSCI World Feeder is going to give you exposure to those global stocks too. But how have they performed individually at the NSE? I'm going to look at different timelines, okay? First and foremost, the current price of these ETFs, the New Gold is going at 5,050 Kenyan shillings, whereas Satrix World Feeder is going at 931 Kenyan shillings. Looking at one-day change, the New Gold has dropped by 1%, whereas Satrix Feeder has dropped by 0.11%. Then looking at 1 month change, New Gold has increased by 2.64% in 1 month, whereas the Satrix World Feeder has decreased by 0.85% in 1 month. Looking at performance year to date, simply put, how they've performed in the year 2026, New Gold ETF has declined by 11.25%, whereas Satrix World Feeder has increased by 4.26% so far this year. And then looking at 1 year change, looking at full calendar year, the New Gold ETF has increased by 26.7%, whereas Satrix World Feeder has increased by 11.9%. And then when you look at the all-time, simply put, since listing, how has each of these ETFs performed at the NSE? New Gold has increased by 242%, whereas Satrix World Feeder has increased by 17.55%. So as you can see, they perform slightly differently, right? Because this year alone, New Gold is down by 11.25%, whereas the Satrix World Feeder is up slight 4.26%, okay? So you could be sitting there wondering, if you have money, will you buy them, all right? Or should these ETFs replace Kenyan stocks, or even so, how should you go about it? We're going to talk about all these in details in this video. You are all much welcome to my channel. My name is Afagza Sifuna. I am a finance expert and qualified accountant who brings you amazing videos about investing and making money each and every day. In case those are kind of topics which you like, down there is a button called subscribe. Click the button for you to subscribe to my channel, and I'll still add it. Drop a like on this video. And of course, as always, in case you want me to provide you investment insights one-on-one, I've also put my WhatsApp number down below. Check out this, my WhatsApp number, reach out to me on WhatsApp. Then we're going to be able to have a very brief introductory call. I understand your investment journey and then see how best I can provide investment insights which you can utilize for you to be able to make more informed investment decisions. And also, down in the comment section, I've attached links to some resources which are going to help you level up when it comes to you investing in the stock markets. Having said that, when you are buying these two ETFs, what exactly are you buying? With the new gold ETF, you are essentially getting exposed to gold through the Nairobi Securities Exchange. The ETF is physically backed by gold bullions, okay? Which, with each security representing approximately 1/100th of a troy ounce of gold. So, when you buy this particular ETF, you are not buying a company. You are not buying Safaricom, buying Equity, whichever company out there. You are not buying a portfolio of business. You are buying gold exposure. Your investment thesis is therefore very simple. You are basically saying you believe gold will retain or increase its value over time. And that is why you are purchasing that particular exposure, right? And then when you are buying Satrix, MSCI, World Feeder ETF, what exactly are you buying? The Satrix MSCI World Feeder is completely different. And that's so because this ETF gives Kenyan investors exposure to the MSCI World Index, which consists large and middle-sized companies across different developed markets. So instead of trying to decide whether you want to buy Apple, Microsoft, Nvidia, Amazon, or whichever large cap stocks out there, or even mid-sized cap stocks out there, you get broad exposure through this single or one investment. That is how ETFs are designed, okay? And the underlying MSCI World portfolio provides exposure to more than 1,300 global large and mid-cap companies across developed markets. So, your investment thesis under this particular Satrix World Feeder ETF is simple. You are basically saying, I don't know which individual global company will win, but I believe global businesses will continue creating wealth over a long time. Therefore, you are choosing to put your money in that particular belief that globally the businesses are going to continue performing well over time. So, when you look at this ETF's performance, how are they actually doing? Of course, as mentioned, the new gold ETF current price is 5,050 Kenya shillings, right? And the year-to-date performance, it's down 11.25%. And over the past 1 year, it is up 26.7%. And all-time, it is up 242%, right? This is a perfect example as to how you shouldn't judge an investment simply looking at one period. Because as you can see, over time, it is up 242%, and yet it is showing fluctuations across the different periods, okay? Now, when you look at the Satrix World Feeder ETF, the current price is 931 Kenya shillings. Year-to-date performance has been up 4.26%, and over the past 1 year, it's increased by 11.9%, and then over time, all time is increased by 17.55%. And this is where you need to be careful when comparing the two. You cannot simply say that gold has returned 242%, and then Satrix MSCI ETF has returned only 17.55%. Therefore, gold is better. No. And I'm saying so because we are talking about completely different investments which have different risks and also are performing differently based on underlying assets, okay? So let's look at the diversification across these ETFs. This is where ETFs become particularly interesting. And I'm saying so because when you look at the new gold issuer, right? Gold can provide diversification because it behaves differently from equities. Imagine you having a stock of only equities. Think about Safaricom, maybe banks like Equity, KCB, EABL, maybe BAT, and so forth. Almost all your investments are ultimately connected to businesses and the Kenyan economy. Okay? In case you add gold or this particular ETF to your portfolio, it gives you exposure to a completely different asset. So, this particular ETF can be used as a portfolio diversifier because it gives you exposure to a different kind of asset. Okay? But don't make the mistake of thinking that gold itself is highly diversified. It isn't. It's simple as that. This ETF is backed by one asset, gold. Okay? And then, when you look at the Satrix World Freedom. This provides more broad diversification. And I'm saying so because instead of relying on a handful of Kenyan companies, you get exposed to companies across developed markets out there. And of course, the companies come from different sectors, different countries, and also operate utilizing different currencies. That is a very significant advantage. But remember, diversification does not mean no risk. Even with this particular index of fund having upwards of 1,300 backing companies, still there is risk, okay? Now, let's look at cost, because I believe if you are in Kenya, cost is also very important when it comes to you investing in the stock market. So when you look at costs related to this particular ETF, and I'm going to look at costs which are basically annual costs of you holding these ETFs, or even so you trading these particular ETFs. Looking at the gold ETF, the annual management stroke sales charge is approximately 0.3 to about 0.4%. That is relatively modest, okay? But that's not the only cost. When you buy and sell through Kenyan stock brokers, you also incur brokerage and statutory transaction costs, okay? And these, of course, are based on specific brokers' rates, which typically vary. By the end of it, we are talking about roughly 2 to 3% thereabout, okay? And then, when we look at, for example, the Satrix World Freedom, the exposure of this particular fund is going to cost you approximately 0.34 to about 0.35% annually. And also, when you are going to transact, remember, buying and selling also has transaction fees tied to it. So you're going to incur brokerage fees too, okay? So don't confuse the annual ETF fees with low cost of investing. And I'm saying so because in Kenya, costs are real things. Of course, there are other markets out there which are more expensive, but in Kenya, for an investor, brokerage fee, statutory charges, and bid-ask spread costs are all part of the costs which you are going to incur as you go about trading in any of these ETFs and even broadly in the stock market. Now, let's look at liquidity. And here is where we have the biggest problem, okay? Liquidity is a challenge when it comes to these particular ETFs, and you are going to appreciate why. You see, you can buy an ETF at the NSE, but that doesn't automatically mean you can sell a large position immediately at the price you want. And I'm saying so because the underlying asset may be extremely liquid. Yes, case in point, gold is extremely liquid globally, right? The companies inside the MSCI World Index are extremely liquid globally at individual levels, right? But the NSE listed ETFs themselves can still be thin local traded activity. And of course, the volumes on these counters say so. That is why ETF trading at the NSE has generally been very thin, with some sessions recording very low turnover and few transactions. That means you need to pay attention to a few things when you are getting on these, because you're going to bump into liquidity challenge, more so in case you are holding a very huge position. Look at trading volumes, okay? Look at daily turnover. Look at the number of trades executed. Look at the bid-ask spread. Look at the market activity. This matters particularly if you are investing large amounts, okay? Don't just invest large amounts without really considering liquidity, because you might want to change your position and yet you won't be able to do that. Let's now talk about another problem, which is currency risks. And this is a big deal for Kenyans. And it's not really a problem because it could also be an advantage depending on how you look at it, or even so, where you're going to be in your investment journey. And this is one of the biggest advantages and also risks when it comes to these two ETFs. When you buy, for example, the Satrix World Freedom in Kenya, you are paying in Kenyan shillings, okay? But the underlying investments are global. That means your eventual Kenyan shilling return depends on two things, okay? First and foremost, how the global assets perform. Plus, secondly, how the Kenyan shilling moves against the relevant foreign currencies. For example, if global stocks rise 10%, but the Kenyan shilling strengthens significantly, your return in Kenyan shillings could be lower than 10%. Because remember, the economic forces are pulling in different directions in that context, okay? So if the Kenyan shilling weakens, the opposite can also happen. So when you are buying, for example, the Satrix World Feeder, you're not simply buying global stocks. You are also getting international currency exposure. The same principle applies to gold. Because remember also gold moves in tandem with the global spot price of gold. Case in point, if the global spot price of gold, for example, increases, okay, it's going to make the dollar pressure to decrease. And therefore, assuming all factors constant, the Kenyan price of this particular ETF is also going to increase. And the opposite is also true. So when you look at risks, which risks are associated with these particular ETFs? Starting with the NewGold ETF. Of course, the gold price risk is extremely high. We all know gold has been fluctuating globally. Secondly, when it comes to income, the risk is very low because there are no companies' profit being distributed to shareholders as dividends on this particular ETF. Third, when it comes to diversification benefit, is very high because remember I've already detailed how this particular ETF can assist you diversify in very unique aspects. And then fourth, when it comes to currency exposure, the risk is moderate to high. And I'm saying so because international gold prices and Kenyan shilling exchange rates both influence the local price of this particular ETF. And then when you look at the Satrix World Feeder, when you look at the equity market risk, is extremely high because remember this ETF is backed by global stocks, and of course global stock markets sometimes do crash out there. Secondly, when you look at the currency risk is high. Your returns in Kenyan shillings is affected by exchange rates movement across different currencies. Then third, when you look at individual company risk, it is low, right? You aren't betting everything on one company. Remember, this ETF is backed by upwards of 1,300 companies. And then fourth, when you look at the long-term growth potential, it is high. And I'm saying so because you are investing in productive businesses across developed markets, okay? So having said that, and you having understood the ETFs in details, will you invest in these ETFs or the individual Kenyan stocks? Let's look at that objectively. And I'm saying so because you might be sitting there asking yourself, are these ETFs better than the Kenyan stocks? Okay? That shouldn't be the question you ask yourself. The real question should be, what role should ETFs play in my portfolio? Please remember, I always champion for portfolio investing because you're investing in or through having a very robust portfolio is going to assist you minimize risk, preserve your capital, and also at the end get a return. That is why, for example, look at the NSE. There are those stocks which have performed extremely well. Case in point, Car and General has increased by upwards of 400% in 1 year. Cooperative Bank upwards of 100%. Stocks like, for example, EABL, Equity, and Bank, and other stocks out there have increased by upwards of 30%. Simply put, the NSE 20 share index has increased by 52% over the past 1 year. Okay? That is a good indicator. But then again, remember, also, that doesn't mean all the assets have increased the same. And that is why it is important also, as part of you building a portfolio, to also consider ETFs, right? To assist with diversification. Because you shouldn't just invest in businesses which are only anchored on a Kenyan economy, and even so, they are appreciating or depreciating at very different and extreme rates. ETFs could assist with diversification in your portfolio. Therefore, should you put all your money into ETFs? Of course, as I've shared, I wouldn't, right? And the thinking is, ETFs are part of the constituents of any portfolio to assist you with diversification and to bring to your portfolio very unique attributes. So, as an individual investor, I'd hold a small portion of my portfolio to have ETFs to bring that unique diversification, even as I have, for example, the Kenyan stocks in a good size in my portfolio and also other asset classes. Therefore, ETFs are good for diversification, but I wouldn't put all my money into ETFs. What do you think? Do you hold ETFs listed at the NSE? How has it been for you? Comment down below in the comment section, but I hope you've gotten a thing or two from this video. Cheers guys, looking forward to catching up with you in other amazing videos next time. Bye bye and you all take care.